Hello, America. You enjoying a nice, relaxing summer, watching your 401k and your home value plummet? Yeah, me too. Quite a wild day on Wall Street today. The Dow was down over 340 points this morning, and then it recovered suspiciously around 3 o'clock in the afternoon. Please go back and see yesterday's real story. With the reports that new home construction is now at its lowest level in over a decade, along with the continued worries about subprime loans, there might finally be a realistic sense of fear in the marketplace. So here's the point tonight. If you're a homeowner or an investor, you should not be living in a state of panic, but you also shouldn't be living in a state of denial. And here's how I got there. I believe to be successful in anything, you just can't be a lemming that's just following others off a cliff. You have to stop. You have to look around. You have to be aware of exactly what's going on. And if things don't make sense or even seem logical to you, then follow your gut and not the crowd, because something probably is wrong. On July 16th, just 3 days before the Dow hit its now infamous all-time high, we did a real story on this program about the stock market. I quoted an analyst that day who was predicting a quick run to Dow 15,000, but something didn't smell right to me. How, I asked, could the market be going up every day when nothing feels right? Gas prices are up. The housing market stunk. Everybody from Al-Qaeda to Iran is threatening us. The analyst we had said, "Oh, come on, Glenn." He thought I was crazy. Please, this isn't 1999. This isn't Pets.com. These companies, quoting, have real earnings. Yeah, I get it, Mr. Wall Street. Talk down some more to me. This may not be 1999. We may not have WorldCom or eToys, but we have something just as bad and perhaps worse, a flaw in the economic fabric of this country called subprime loans. Just like back in the internet age, companies and investors today have once again let greed get in the way of common sense. And now we're all about to pay the price. You know, we can talk about how bad it's going to get, and we will in a second. But first, let me get an update on exactly where we stand. Susan Lisovich is at the New York Stock Exchange now. Susan, what is the mood there and what happened today?
Well, it was a wild day, even by Wall Street standards. Mr. Beck, and I might compliment you on your very astute observations of the U.S. economy. I am not kidding you.
Wow.
It was quite succinct as well. Well, you know, Wall Street, Glenn, has never been accused of subtlety, but today the drama was especially rich. 4 weeks to the day that the Dow closed at 14,000 for the first time, the blue chips officially entered into a correction, a decline of 10% from recent highs. So did the Nasdaq and the S&P 500. The Dow's sixth straight sell-off fueled by more bad news from the housing sector. New home construction in July dropped more than 6%. Worse than expected, to the lowest level in 10 years. Meanwhile, the nation's largest mortgage lender, Countrywide Financial, said it was forced to tap into an $11.5 billion line of credit. This as a result of the rising defaults and delinquencies the company had already disclosed. But the drama didn't end there. The Dow, which had plunged as many as 342 points, came back to life. A veteran trader had told me earlier today that Wall Street is the only business in the world where you can have a fire sale with no interest from buyers. Well, clearly, some intrepid bargain hunters ventured out late today. The Dow entered into positive territory in the final moments of trading, but couldn't hold it. The blue chips closed down 16. The S&P 500, which yesterday wiped out all of its gains for the year, added 4.5. The Nasdaq pared most of its losses, but still ended down 8. And the drama, Mr. Beck, begins all over again tomorrow at 9:30 a.m. Eastern.
Susan, we'll be watching. Thank you very much for the update.
Welcome.
Now, during the Great Depression, my grandfather learned a lesson that he taught me when I was very little. He said the people in the Great Depression who survived, the ones who made money, were the ones who had money to buy when everybody else was losing their shirt and selling. It was one of the greatest lessons he ever taught me, and he taught me a lot. I understand that what we're seeing right now may be nothing more than a healthy, natural market correction. But I got to tell you, my gut doesn't tell me that. We have to at least acknowledge that it may be something far worse. What CNBC's Jim Cramer tried to do last week was, well, tell us about this. It was a passionate tirade imploring the Federal Reserve Bank chairman to alleviate the pressure on the lenders by cutting interest rates. Watch this.
Bernanke needs to focus on this. Alan Greenspan told everyone to take a teaser rate and then raise the rate 17 times. And Bernanke is being an academic. It is no time to be an academic. It is time to get on the Bear Stearns call. Listen, open the darn Fed window. He has no idea how bad it is out there. He has no idea. He has no idea.
Kramer.
I have talked to the heads of almost every single one of these firms in the last 72 hours, and he has no idea what it's like out there. None! No, we have Armageddon. I wouldn't try to cause it. We have Armageddon. In the fixed income markets, we have Armageddon.
Okay, if Kramer is right, and if this is Armageddon and nobody will admit it, then this stock market drop and the housing slump may literally be the tip of the iceberg. So let's please not be lemmings here. Let's step back and look what it really could mean and what the worst case scenario could really look like. Peter Schiff is the president of Euro Pacific Capital, Inc. He is the author of Crash Proof, How to Profit from the Coming Economic Collapse. This is a book, this guy is not a nut job, this is a book that has basically predicted the current housing and hedge fund disasters. Peter, give me the big picture here. We've got a credit problem.
You know, you've got a pretty good grasp of it. You got to go with your gut. You know, your gut is right. And it's not just subprime. You know, it's not just people with bad credit that overpaid for houses and committed to mortgages that they couldn't afford. And what we're seeing right now around the world is the people who have been lending Americans money, whether they're hedge funds here in the States or overseas central banks or foreign banks, they are discovering now that Americans simply cannot afford to repay these loans. And they're also discovering that the collateral behind these loans, residential real estate, is not worth anywhere near the amount of money that they lent out.
Okay, so we've got a couple of things going on. First of all, I mean, if anybody remembers back to 9/11, what did the president say we could do as Americans? He said, go to the mall.
Yeah.
So we've got a bogus economy.
Exactly. You know, that's why it's so disingenuous when you see people on Wall Street or the government say that the economy is sound, that what's happening is not going to impact the economy. I mean, of course it's going to impact the economy. Our whole economy, our artificial bubble economy, has been based on consumer spending. And they've been spending borrowed money principally from abroad. And what's happening now, as I said, is lenders are losing a lot of money, and they're not going to lend to Americans anymore. It's going to be very difficult for Americans to get a mortgage going forward. They're going to have to put a down payment. They're going to have to prove that they can pay the loan, not just for a few years while there's a teaser rate, but they're going to have to prove that they can comfortably handle the payments even when they reset the higher rates. And today's housing prices are completely inconsistent with legitimate lending standards. So the only way anybody is going to be able to buy a house in the future is if the price of houses collapse, and that's what's going to happen.
Okay. You actually say that everybody just hasn't caught up to this yet, that our houses are worth about 30 or 40% less than we all think.
Exactly.
Tell me, is this 1990? Is this 1979? Is this 1929? What's coming our way?
Well, I don't know what it is. It's going to be pretty bad. I mean, and you mentioned...
Well, I mean, are we talking Jimmy Carter years, or are we talking Hoover years?
Well, it's going to be worse, certainly, than the 1970s. I mean, we're going to have to pay the price for years of living beyond our means. While we were spending all this money and consuming, our real industrial base was disintegrating beneath our feet. So we've been living off of borrowed money, an artificial standard of living, and that's all going to come to an end. You know, just like an individual, if you quit your job and live off of a credit card, eventually, you know, the bills come due,
right,
and you have to downsize your lifestyle. That's what's going to happen. But, you know, you talked about in the 1930s where if you were in cash, you did well. Unfortunately, this time around, our money, the U.S. dollar, is going to collapse as well. So simply having money in the bank...
Hold on just a second. Peter, you honestly are sitting here making the prediction that the U.S. dollar is going to collapse.
Yes, I think it's going to lose at least 50% of its value, maybe more. And
in what time period?
It could happen over the course of just a couple of years, maybe even sooner.
Well, I've got 30 seconds, and we could spend an hour on this. What exactly is the average person supposed to do?
Well, I mean, what you can do is if you get rid of your dollars while you can. I mean, that's what I'm helping my clients do at Euro Pacific. We've been doing that for years. You know, we're selling dollars, and we're accumulating foreign assets. We're investing in Asia and Europe. We're trying to get rid of a currency that's on the verge of a collapse.
Holy cow. Peter, thank you very much. Coming up...